What's up, traders? One of the most profitable way to trade the market is trading with the trend. Now, the most difficult part trading with the trend is to find out when to enter the trade. Now, to find out when to enter the trade, you need to know how the market moves. As you know that market will never move in straight line. So there is a language in the market. The market moves like, let's say, an uptrending market will move like this. There will be an impulse and then pull back and then another move and then pull back, and this is the language of the market. And at the same time, a trend will never continue in one direction forever. At some point, you see that the trend is reversing and the trend is changing. So in that case, to enter the trade, to ride the trend, a trader must need to know either it's a pullback or it's a reversal. Now, at the same time, keep in mind that it is not possible for a trader to exactly know either it's a pullback or reversal, but there is some way that we can identify a market is reversing or it's just a pullback, so that we can trade the trend, ride that trend, and secure a big profit from the market. So with that said, in this video, I will be showing you how you can identify a market is in a pullback or it's a reversal. Before I begin, this is Forex Wizard from Forex Trading Wizard Academy. If you're new to the channel, make sure you smash the like button and also hit the subscribe button if you haven't done yet. With that being said, let's get started. Okay guys and girls, so to find out either a trend is in a pullback or it's a reversal, we will consider some criteria. So let's start with the reversal criteria. Now this is not just some strict rules, just my observation, experience, and this works. You can see that this will really works, and I will show you in the real chart what I'm explaining. It will be easy. Just make sure you stick till the end to grab everything I'm giving in this lesson. So what you see that, first of all, reversal criteria. So the first criteria for the reversal that we'll consider is there should have a reversal pattern, which is very, very important. That when you see a trending market, let's say creating a series of higher high and higher low, and at some point you might see a reversal pattern. So a reversal pattern could be a head and shoulder, double top, double bottom, V shape or A shape movement. Now, if you don't know how this double top or double bottom works, or a head and shoulder, I have dedicated video. I will link it above. This is a very good one for double top and double bottom. You can watch that. Now this V shape, A shape. So let me quickly tell you what is a head and shoulder. You know that when you see that the price is creating like a head, left shoulder and right shoulder, and then broke down, that's a head and shoulder. Double top, double bottom, you know very well when you see the price created like this double top or a double bottom in an uptrending market, double top in a downtrending market, double bottom, that could be a sign of reversal. And V shape, A shape is like, let's say a market is moving in a channel like that, okay, in an uptrend. Suddenly you have seen that the price created this kind of breakout to the upside, huge move, and then again immediately came back down. That is what we call A shape or V shape movement. So these are common reversal pattern. There are other could be reversal patterns such as just a consolidation, could be a reversal pattern depending on situation, but these are the most common reversal pattern. So this is the first criteria. Second criteria, the reversal pattern should be on an important area of value. Always keep in mind, a double bottom, a double top, or any head and shoulder you see anywhere in the chart does not mean that it's a reversal. Keep in mind, don't make this mistake that when you see a double top, don't sell, or once you see a double bottom, don't buy. You need some other factors to confirm you that this is what you need to consider. So reversal pattern should be on an important area of value. It has to be in a perfect location that I will explain in the chart, but keep in mind that it has to be in an important area of value. Then there is another factor that will be criteria will consider multi-time frame element. So what is a multi-time frame element? Let's say you have seen a market is trending to the upside, okay, creating a series of higher high, okay, and higher low. But this trend that you are considering, let's say in 15 minutes, okay, 15 minutes, but it's an uptrend, but on the daily it could be in a downtrend. So this could be an pullback of this downtrend to the upside. So that means that, let's say or in a 4-hour time frame, if you see that a price is creating a series of higher high and higher low, and the price reached let's say a weekly resistance zone, okay, monthly resistance zone, and you have seen a head and shoulder has been formed in this important monthly resistance, that could be a very, very important reversal. So you need to consider multi-time frame, that an uptrend on the lower time frame, and then you have seen a head and shoulder, double bottom, double top in a monthly resistance or weekly resistance, which is respected couple of times or an important area of value. That could be a reversal. This is very important. Multiple time frame element. Now the last thing, the last criteria is the reversal should be tested with proper price action confirmation. Guys, keep in mind, a reversal pattern is not enough to trade. This is the biggest reason trader lose money. I did too when I was started. I was impatient. Whenever I see a head and shoulder, let's say head and shoulder reversal, let's sell, and at some point just is reversed to the other direction. So then the proper way to trade a reversal pattern, any kind of reversal pattern, is you need to wait for a retest of this reversal pattern. Let me show you here. You see that there is an uptrending market. Let's say this one is creating a series of higher high, okay, and then higher low, all right, creating a series of higher high and higher low, and then created this head and shoulder pattern. Nice looking head and shoulder, has broken to the downside. It's not enough. You need to wait for the price to go up, okay, test this neckline, this support here, need to test as a resistance, because at any point there is a plenty of example in the chart. You will see the price just started to move up again and continue its trend. So you need this reversal pattern to be tested, could be head and shoulder, any kind of reversal pattern, and need a rejection here, okay, need a proper price action confirmation, okay, and then once it has the price action confirmation and it started to trend down, that is where you can say that the price is reversed, new trend, new direction, and that is how you will identify a reversal. Now let me give you a couple of examples matching this criteria, then we'll go to the trending criteria. So let's jump onto the chart. Okay guys and girls, so let's look at the example for reversal criteria. Now you can see that this is Aussie dollar for our time frame chart, and we'll see a good example on this one. You can see that the price, first of all, trending to the down, okay, this is a trending down, and what you saw that there is, let's say here there is a double bottom, okay, or triple bottom, and then the price reached above, but it didn't make it through, it didn't create a reversal again from this resistance. It came back down, okay, it dropped again, and you can see that quite a few places here also they look like a reversal pattern, and then reached this resistance and came down. The same thing here, nice looking double bottom, but the price didn't go far and then came down again. But when you see this one here, why this reversal pattern, this, you can say this is a nice looking double bottom, the price came down, went above, again came down to the zone and created this double bottom. Now why this double bottom is so important, that the price reversed from here, this is a recent chart, and we see already a big movement happen, it's likely to move further. What is the significance in this reversal pattern? So let's first apply our first criteria. We have found a reversal pattern that has a double bottom, the first criteria. Secondly and third, same criteria is that it has to be in an important area of value, and it has to have a, we need to see a multi time frame element on it. So let's draw a support on the last bottom point of this double bottom, and to see actually where it is residing. So let's now look at the higher time frame. Let's look at the monthly. Okay, now this is the monthly point. See, this is the point where we have seen the reversal on the 4-hour time frame. If we extend this line, there is a very important point to look at. See what happened, that where this point is reversed. You see, this is the point where the price bounced on the 4-hour. There is a doji and then double bottom formed. Now look at the past here. You see, this is the candle exactly where we have seen that reversal. And if you look at the bottom, this is the long doji, has the lowest possible price. This is formed during the pandemic time, during the a coronavirus time. This candle formed, and this is a huge doji, and from that point you see that the same level acted in the past here as a support back to back 3 months support, and the same level acted here as a resistance, and this candle has a huge long tail in it. And from that point we have seen that if you go back to the 4-hour time frame, and this is where we have seen this doji is formed and this double bottom has been formed, and that is where this double bottom is very special than any other reversal pattern you can see in the chart. So you found the reversal. Now if you just trade double bottom always, probably you will get confused here. There is a trade, but if you have a high risk to reward, definitely you need a good we are talking about the trend reversal, not about the trade. Let's say it's a double bottom. If you trade is 1 to 1.5, even 1 to 2, you can win that trade. We are not talking about the how to trade double bottom, double top. We are talking about the reversal, trend reversal. So we have found double bottom, we have found the multi time frame confirmation area of value. The next thing to consider as a reversal. So here we have found double bottom, but we are not considering as a reversal. But here we need the next criteria is that the price has to test the neckline of this reversal, this point, this resistance here, okay, as a support, and then after rejection, then we can say that okay, the price reverse, new trend, this downtrend turn into an uptrend. Okay, this is how it creates a reversal pattern. This is the right way to trade. And if you closely look at, you see a correlation. You can see that this point is connected with that long wick candle, and this point is connected with this one here. You can see. So that's how the market moves, creating a connection with the lower point to the higher point. So we have found that. Now this is how it creates a reversal pattern. Now let's look at how you can find out when the market is in pullback. Okay guys and girls, so let's look at now pullback criteria. Now as I told you, it's just a general idea so that you can understand the market, how it moves. There is always variations in the market, that's completely fine, but if you just get an idea of how the market works. So what do you see, the pullback criteria? Now the bigger impulse candle with smaller pullback candles. This is the most important criteria in a trending market, is that when you see that the price action, the candles are bigger in the direction of the trend, larger, that is an impulsive candles. And then when you see that opposite direction of the trend, the candle is comparatively smaller, narrower, okay, and that is a sign of pullback. Very important. In the direction of the trend, impulsive candle will be bigger. When you see smaller candle going to the upside, it's a sign of pullback. This is the first criteria. Second criteria is no reversal pattern is better confirmation. So if you see that an impulse like that and only smaller candles, couple of 1-2 candle has gone up, but there is no double bottom or any kind of reversal pattern, that's a better confirmation of pullback. Now in the pullback also you will find always, many times you will find this double bottom, double top. That's completely fine, we'll discuss this later. But if you see that there is no reversal pattern, that's a better confirmation. Now the third criteria, the stronger price action to the direction of the trend after pullback, is that the pullback is over, the price is ready to go another create another impulsive move. So what do I mean by this? Let's say a stronger impulsive move to the downside, and then followed by a couple of smaller candles as a pullback. Okay, and then what happened, if you see that, let's say a big stronger bearish engulfer has formed here like that, okay, red candle, that is a sign of another impulse. So when you see this kind without any reversal pattern, again a big candle formed, that's a sign of another impulsive move. So these are the signs of pullbacks. Now let's jump onto the real chart to see how, some of the examples, so that we understand actually how these things works. Okay guys and girls, so let's see this example on British pound US dollar. Now what do you see? That you see there is a strong breakdown from this head and shoulder from this zone, and then after this breakdown, this is, look at the impulsive candle, the major trend is down. Okay, you can see that if you zoom out, it's a major trend is down. So in the direction of the trend, what we have seen, that there is a strong breakdown. Okay, this is a very, very strong breakdown. And then look at the breakdown candles, a big red candle followed by another big red candle, another red candles. So there are a couple of candles, very, very strong breakdown, followed by, look at this, pullback candles. Okay, these are pullback candles. You can see the difference between the activities between buyers and sellers, what happened. And then later what happened, look at this, see the next impulsive candle is another strong bearish candle. So this, when you see this candle, you can expect that it is coming for a pullback. Okay, so now let's see a couple of examples more. Okay guys, so look at this one here. As you can see that the price was in a downtrending market structure. It's a long-term downtrend. We can see that it's a really good long-term downtrend. And what we have seen, that there is a strong downtrending move. It's a big movement happened to the downside, and then followed by, look at the pullback candles. Look at these candles. These candles will tell you clearly that this market is in a pullback. Compare the impulse and compare the upward movement, then you can see clearly that actually what's happening in the market. And then you can easily trade when you see this kind of candle, wait for another one to drop, and that is a sign of another stronger move. So that's what you need to compare, the buyer's candle, the seller's candles, and the direction of the trend. So this is a sign of strong bearish move, and you see that after that what happened, the price basically has moved a lot to the downside. If you trade from this doji, it's a good trade to the downside. So let's see more examples on this kind. Okay guys, so let's see this example. This is also a nice looking uptrending market structure. Now when you see a trending market structure, let's say an uptrending market structure, as I told you, you need to consider always the previous swing low and swing high. So when you see this impulse, and for the pullback, you need to wait for possible, not always, but possible test of this previous resistance as support, let's say in an uptrending market. So the same thing you can apply here. If you see that this is a nice looking uptrending market creating a series of higher high and then higher low, so it's a nice looking uptrend. You can see that this is the resistance here. Okay, this is the resistance here, and the price has broken to the upside, now came back to the same level. Look at this, the impulse and the correction, you can see it clearly, a nice looking impulse. You see this is a big move happened to the upside. Okay, and look at the pullbacks. So this is a consolidation, and finally what we have seen, that there is a long wick candle has formed. Now this long wick candle basically tested this previous resistance here and here as a support, and then has created this rejection to the upside, followed by this bullish candle. Now this candle can be an entry candle, because we already have seen that it has completed this previous resistance testing as support, and then created this bullish candle. So that is the thing, the impulse correction, and again the same thing, impulse, you can see that clearly, the impulse, again the same thing, this impulse has created this impulse followed by this correction. So every time the price was creating a series of a higher high and higher low, so that's a sign of a trending market. And you can see clearly what the pullback happened. When the pullback happened, smaller candle has been created, tested this previous resistance and support. Now when this impulse happened, it's a clear impulse. You see the big candles, green candles, followed by we have seen, and then impulse, okay, the correction on the pullback. In this pullback, what you have seen is exactly the previous resistance here, tested as support and created this couple of long wick candles, dodges, and then the price again has created another impulse. This is another impulse. This is the candle that can be bought. Okay, so you need to, to make sure that the pullback is over, you need to keep in mind when is the pullback over. You need to understand it by another impulsive candle. Okay, so let me repeat again. When you see an uptrending market creating a series of, a higher high, okay, higher high and higher low, and then you see that the price tested this previous resistance as a support, okay, that's first thing. And now when you can consider that this pullback is over, sometimes you could see that as I showed you previously, that you might not see this resistance test as a support. Instead, what we could see that the price basically came a smaller candle and then created another impulsive candle. So the way we can understand this is from the pattern of the price action. If you see that another strong an impulsive candle has been created to the direction of the trend, that's a sign of pullback is over, the price is ready to go, and that is where we can enter a buy trade or sell trade in a trending market. Guys and girls, hopefully that this valuable lesson was helpful to you. Thank you for watching this video, and also if you guys and girls want to learn my strategies, join my program, trading with me every single day. There is a link in the description area. You can visit the website to see possible opportunity to join. Thank you for watching. See you soon in my next video.